Just a quick note, if you are interested in purchasing this indicator in return for you taking your time for watching this video, you can send us an email at daytradinggps@gmail.com to request a discount promo code to purchase the indicator. Thank you. Okay, just a quick note before we start this video. This is going to be a condensed version. Today it's going to be a lot shorter than our typical SPX video. So if you look in the description of this video, you'll see these various links. One is a video overview of the indicator. One is new features video for the new V3.0 version that came out, so you can see what new features were added. There's also additional resources. There's a Google Drive link for descriptions and links to other videos that are about different topics about using this indicator. There's also a link to longer SPX trading videos that go into more detail about this indicator and the daily key levels trading strategy and what all the different levels mean that the indicator gives you, etc. And you'll also see under that there's one particular video that also, in addition to the daily key levels trading strategy, also goes into the SPX lotto options strategy as well. And then below that, additional videos that are just on the daily key levels SPX options trading strategy. Thank you. Okay, so some of you may already be familiar with how this indicator works from seeing our other videos on SPX sessions on this channel. But for those of you who have not seen any previous SPX session videos, this particular video is going to be a condensed, shortened version in which we're not going to go into all the different details about how this indicator works and all the different levels and what they mean. So I would direct you to the description of this video, as we pointed out in the preview, and you will see there a link to a video overview of the SPX daily key levels indicator. You will also see a link to the new V3.0 version of this indicator, which was just released, which goes over all the additional features that were added from the V2.0 version. And then there's also a Google Drive link that has links to specific topics on the SPX Daily Key Levels Indicator, which you can click on that and see specific links to various topics. And then finally, there are links to other longer session videos in which we go into more detail about the indicator. So please look at those. Okay, so for this session, we had the war starting over the weekend, so we had a significant gap down. Starting off here, which you have this very long wick candle to start off with on the 9:30 open, which is marked off here. We have our 9:30 a.m. BBKPL level alert on with the acceptable range filter also turned on. So I'll just show you that real quickly here. So in the user control panel, we have the alerts here. Enable BBKPL 9:30 a.m. opening candle close alert, which is either a close above or close below. And we have the apply range filter turned on and the acceptable range filter on the default of 85%. This is adjustable by a user if you wish to increase it or decrease it from 85. However, 85 is what we use it on, and that is considered the max amount that you should. So if you're looking to adjust it, then it should be adjusted downward, not upward. Okay, so we also, as you can see here, have the market scenario analysis table turned on. That is an optional table. So you would go down here, show market scenario table. This is displayed at the 9:30 a.m. open on the first tick of the open. You can adjust the size of this table as well as the position of the table. You don't have to show the table by default. It is turned off. However, we have it turned on for here just for display. Now we also have one-page PDF cheat sheets in which you are a subscriber to this indicator. Then you also get a Google Drive link to a PDF cheat sheet, which is for each of the 6 specific market scenarios. So if you don't want to have this particular scenario analysis table on your chart and you prefer just to view the PDF cheat sheets, either by printing them out and viewing them that way offline and studying them offline, or if you have a second monitor, a second screen that you just want to display that on, that's another way that you can do that instead of having the market scenario analysis table on. The market scenario for today's session is also shown on this table here for the PMH, PML, YDH, YDO, and YDC levels. As you can see here, it's full gap below, same as shown here on the market scenario analysis table. Okay, so we're going to go into the trades of the session here. We're going to go to another screen, but before we do that, we're just going to go through the setup here. So here we have the 9:30 a.m. Opening candle. We're on a 2-minute chart. That's the recommended chart time frame for using the indicator for our daily key level strategy. Now, you can utilize our daily key level strategy, which we outline in this video, as well as the other videos on SPX sessions using this indicator. However, there are other traders that prefer to use other strategies such as credit spreads, debit spreads, iron condors, butterflies, or straddles or strangles. So you can also utilize this indicator and the key levels that it gives you for those other strategies as well. You don't have to use the daily key level strategy that we outline in all of our SPX sessions, which is simply buying puts on bearish entries and buying calls on bullish entries. So just keep that in mind that with this indicator, you can use it for various different strategies, not only just the strategy that we outline in all of our session videos, which is the daily key levels strategy. Okay, so with this, we have the 9:30 a.m. opening candle. We have this long wick, and we have the opening candle closing above the bull bear key price level. So that is your bullish entry signal for a bullish entry off of the bull bear KPL level. So next we'll look at the trade and how the trade progresses here and the different TP levels for this trade. Okay, so here are the trades of the session. Again, as we went over, we have the 9:30 a.m. opening candle with this long wick, and it closes above the bull bear key price level for today, given by the indicator, which is 6809.36. So this is your bullish entry signal off of the 9:30 a.m. opening candle close. Your tight stop loss level for this trade. On bullish trades with this indicator, it is the QL below the level that you're taking the trade from. In this case, we're taking the trade from the BBKPL level. If you're taking trades off of bullish trades off of other main key levels, the main key levels with this indicator are the bull bear KPL and the R1 through R6 above and the S1 through S6 below. You can also take trades off of the YDH, YDC, YDL, PMH, and PML levels. Those are done through the user control panel in a separate section for those levels where you would select either the tight stop loss or the standard stop loss for those along with your reward risk parameters, which the default is 2 to 1. $2 of reward for every $1 of risk. However, those are available from 0.25 all the way up to 30 in 0.25 increments. So those are done differently on this indicator than the trades taken from the main key levels. So with the trades on the main key levels, the R1 through R6, the BBKPL, or the S1 through S6 levels, for bullish trades from those levels, it's always going to be the QL level below the level that you're taking the bullish trade from. So if you're taking trades off of other main key levels besides the bull bear KPL, and you simply turn on the QL level below in the user control panel for the specific key level you're taking the bullish trade from. The standard stop loss level, if you prefer to use that over the tight stop loss, is going to be the first midpoint level below the level that you're taking the bullish trade from. In this case, that is the mid BBKPL S1 level. Again, if you're taking a bullish trade off of any of the other main key levels, standard stop loss is the first midpoint below that particular level. And it works the same in reverse for bearish trades. On bearish trades, your tight stop loss is going to be the QL above the level that you're taking the bearish trade from. So in the case of other key levels, you would simply turn on the QL above that level for a bearish trade. And on the standard stop loss on bearish trades from any main key level, it is going to be the first midpoint above the level that you're taking the trade from, which in this case, if we were taking a bearish trade, instead of having this bullish close, we had a bearish close below the bull bear KPL, then our tight stop loss would instead be the QL above, and our standard would be the midpoint above. In this case, though, it is a bullish trade, so our tight stop loss is the QL level below the BBKPL, the level we're taking the trade from, and the standard stop loss is the first midpoint level below the level we're taking the trade from. Here we have the 9:30 a.m. candle closes. We have the ask prices on the candle closes here. There's always going to be 3 strike options to choose from on any bullish or bearish trade from any of the main key levels, whether that's the bull bear key price level or the R1 through R6 or S1 through S6 levels. In the case of this particular trade, this is a bullish trade from the bull bear KPL level. So how the 3 strikes are determined with this indicator for this bullish trade from that level are as follows. So the standard play is going to be the strike that is closest to the bull bear KPL level. That's the level you're taking the trade from. In this case, 68.0936, so that's going to be the 68.10 strike. And in this particular trade, since it's a bullish trade, the 68.10 call option. There's 2 out of the money strikes to consider on this trade. The way you figure that out is you simply look above. Since this is a bullish trade, we're looking above from the level we're taking the trade from. In this case, the first midpoint level above is where we're looking for the first out of the money strike to consider. Mid BBKPLR 168.1914, so that's going to be the 68.20 strike. So the 68.20 call option is our first out of the money strike to consider instead using on this trade. And the furthest out of the money is going to be 1 full level away from the level you're taking the trade from. In this case, the bull bear KPL, we're looking above. Since this is a bullish trade, 1 full level above is the R1 level, 68.2892, so that's going to be the 68.30 strike. In this case, a call option, since that is a bullish trade from this level. So here we have the entry prices for the ask on the close of this candle. You're of course waiting for the close of the candle. You're not buying intra-candle. You're waiting for the close of the candle to confirm direction and the level that it is closing above, in this case the bull bear KPL. The ask price on the 9:30 a.m. candle close, which on a 2-minute chart is closing at 9:32, is 29.60. If you instead want to use the out of the money, closest out of the money strike, that again was the 68.20 call option. The ask on the candle close is $24. The furthest out of the money strike was the strike closest to the R1 level. The 68.30 call option, the ask price on the candle close, $19. Now with the daily key level strategy, there's two different types of trades to take. One is a scalp only trade. On scalp only trades, you're looking for a one level minimum move in your favor for the scalp exit. So the scalp trades are, of course, quick in and out trades, so that we're only looking for a one level move in our favor. How you determine the one level move in your favor with this indicator for your scalp exit is you take the level that you're taking the trade from, in this case the bull bear KPL. You look in the direction you're taking the trade from, in this case a bullish trade, so we're looking above. So one full level above is R1. R1 is our exit for a scalp only at 9:34 a.m. It hits the R1 level for a scalp only exit. There we have the bid prices on the candle close of this candle at the 9:34 a.m. candle, which of course, since it's on a 2-minute chart, closes at 9:36. The 68.10 bid on the candle close is 37.80. That's a profit of $820 per option. The 68.20 bid on the candle close 31.30. That's a profit of $730 per option. The 68.30, the last one was the 68.20, of course. The 68.30, 25.40 on the bid. So that is a profit of $640 per option on that scalp only move. The other type of trade that you could do with the daily key level strategy is called a regular trade. Regular trade is a 1.5 level minimum required move in your favor for you to either exit the trade or choose one of several different options depending upon how many contracts you're trading will depend on which options you have available to you. So the other options besides this exiting 100% on a 1.5 level move in your favor on a regular trade are going to be either adjusting your stop loss to break even being the price that you paid for the option. So if you remember, when we start the trade on the initial trade entry, we're using levels for either our tight stop loss level or standard stop loss level. It's level based. However, when you're adjusting your stop loss to break even or break even plus a profit buffer, if you want to add a profit buffer, you are instead then changing your stop loss to a price of the option base stop loss. So then you're changing to break even, which is the price that you paid for the option. Or if you're adding a profit buffer, then you're adding a profit buffer of an additional amount above the amount you paid for the option. The third option is only available if you are trading multiple contracts. So if you're trading only one contract, then your choices are simply either A, exiting the trade, or B, adjusting your stop loss. Those are the only two options. However, if you have if you're trading, say, more than 3 options, say 3, 4, 5, 6, 7, 8, 10, 20, 15, etc., then the third option, if you're trading multiple options, is that you can exit roughly 2/3 or up to 90% of the options that you're trading. And then on the remaining runners, you would then, on the remaining runners left, adjust your stop loss to break even or break even plus an additional profit buffer, which we recommend an additional profit buffer if you're going to add one at the initial adjustment of no more than 15%, somewhere between 10 and 15%. However, that's up to each individual trader or you can just leave the remaining runners at just the break even. So with that, what you're looking to do is you're looking to lock in profits by selling roughly 2/3 to up to 90% of the option contracts you started out with. And then on the remaining runners, you're looking to capture additional profits as price continues to move in your favor, and then either exiting or adjusting further your stop loss as price continues to hit additional key levels in your favor on a trending move. Of course, the other option here is just, even if you're trading multiple contracts, is you could just adjust your stop loss on all of the contracts, even if you're trading multiple contracts, or you could simply exit all of your contracts as well. That, of course, is up to the individual trader to decide for themselves. So on this 9:36 a.m. candle here, we have the hit of the mid R1, R2 level. That is a 1.5 level move. So we have a 1 level here, moved to R1. And then mid R1, R2 is another half level. So that's the 1.5 level move in your favor. So that is the minimum required threshold for a regular trade, whereas the ideal minimum move for a regular trade is going to be the 2-level move in your favor. So it's up to each individual trader whether they want to look at those options either at the 1.5 level move in their favor, or either starting at the 1.5 level move in their favor or the 2-level move in their favor with this particular daily key level strategy. So on this 9:36 a.m. hit of the mid R1, R2 level, we have those outlined here. The bid prices $39.50 on the 68.10 call. That's now a profit of $9.90 per contract. The 68.20 bid for the bid for the 68.20 is $32.70 on the candle close. That's a profit of $8.70 per option. As you can see here, it did wick up higher, so we're going off of the candle close, which of course it backed off. So on those kind of candle close decisions, sometimes they're going to go in your favor, where the candle close is going to be either at or above the level, or sometimes it will react like this, where it is backing off. The main thing to keep in mind is that you want to try to keep whatever type of system that you're going to employ, whether doing your exit or adjustments on candle close hits on the candle close, or whether you prefer to do it on the actual hit of the level and not wait for the candle close. So that's up to each individual trader to decide. It's just generally better to be consistent in how you are doing that on each of your level moves in your favor, either using the candle close or just the actual hit. Okay, the 68.30, 26.60 bid on the candle close, profit 760. Now here at the 9:48 a.m. candle, we have a hit of the R2 level. That is now a 2-level move in your favor. And again, this is the minimum ideal move for either exiting or making your adjustments, and or if trading multiple contracts, doing your exit, scaling out 65 to 90%, roughly 2/3 to 90%, and then leaving remaining runners with a stop loss adjustment to break even or break even plus an initial profit buffer. The 68.10 call option here, now that's over here, 46.50 on the 68.10, that's a profit of $1,690 per option. 68.20, 38.80 bid on the candle close, profit $1,480 per option. 68.30, 31.60 bid on the candle close, profit $12.60 per option. Now, in this point, whether you have just adjusted your stop loss either here or here on your contracts, or you have remaining runners, then we have a hit on the next key level hit here at the mid R2, R3 level at 10.12. That's now a 2.5 level extended move. So we have from here 1 level, 1.5 levels, 2 levels, now 2.5 levels. Here we have the data boxes for the bid prices on the 12 a.m. candle, which of course on a 2-minute chart is closing at 10:14 a.m. Excuse me. So the 68.10 is 59.80 on this candle close profit now 3,020 per contract. 68.20 is 51 even. That profit is 2,700 per contract. 68.30, 42.50 bid on the candle close profit, $2,350 per contract. Okay, so as we stated earlier, you can look in the description of this video for an overview of this indicator, as well as a link to a video which goes over the new features that were added in the V3 version that was just released a few weeks ago. And look at that video. And then we also have the Google Drive link on other aspects of this indicator on specific topics. And then also we have links to other longer SPX session videos in which we go into more detail about this indicator. And there's also a link there also about the lotto options strategy, which you can also use as part of the daily key level strategy, and what are the rules and process regarding lotto options, which are for trades that happen later on in the session, specifically from 2 p.m. to 3:45 p.m. Okay, so if you are interested in purchasing this indicator, you can email us in return for you watching this, taking your time for watching this video today. You can email us at daytradinggps@gmail.com and request a discount promo code to purchase lifetime access on this indicator. And if you send us that request on the email at daytradinggps@gmail.com, we will send you a discount promo code that will give you a substantial discount on lifetime access on this indicator. So again, thank you for taking the time for watching this video today. Now we're going to show you some of the feedback and reviews from other traders who use our daily key levels indicators every day. So you can see how other traders who are actually using this indicator every day, what their comments and feedback are about it, and what type of reviews they're leaving. Okay, so for those of you who might be wondering, well, how is this working for people that have purchased the daily key levels indicators? You can go to daytradinggps.com and look at the user reviews and feedback. We've just taken some of them here and highlighted parts of them, but we invite you to go to daytradinggps.com and look at the reviews and trader feedback on our various daily key levels indicators, including the SPX daily key levels indicator. Thank you.